Hello, ladies and gentlemen. Welcome back to another trade breakdown, or let's say session preparation. That is what we're gonna call the this new series where I will prepare with you my expectation for the day and how I will approach the market. Now, let's dive deep into the analysis. So we start off with the XY, and basically, again, I'm only trading equity futures. And the thing is, it's kind of tricky as we have mentioned in the evening commentary. We are at long-term target objectives. We are mostly overextended on various different asset classes. That's why it makes it tricky. So I have framed expectations for this session. Now, if I want to be short on the equities futures, if I want to short NQ, YM, or ES, then of course we want to see dollar rally higher. And as you can see, dollar has reached up into a long-term objective, which is a monthly fair value gap high, which is also weekly low or a daily low. This means every time we reach a long-term target objective, market is very susceptible for distributions of bigger positions. You can see we traded below a H1 sell side liquidity pool, market traded below that, and right now it looks like that we are rejecting this liquidity pool at the moment, and maybe we could even get a run above this short-term high. Again, our confirmation, we want to see the run on dollar higher above the 7 o'clock swing high right here. We would want to see a close above this bearish 15-minute fair value gap to confirm this idea, okay? This is the expectation for dollar for a sell scenario on the equities futures. 10-year T-note futures must be bearish in order to let the equities futures really roll over. We have a mitigation block, and coupled with the 1 hour fair value, and I expect a sell-off from there. Again, a deeper retracement. Also, just look at the candle closures on the daily time frame. You can see we are rejecting the liquidity pools, and we have a divergence. But that's really not the key factor here. It's just studying the daily candle closures, and I'm watching the sell-off from this 1 hour mitigation block. That should allow for a rollover on the equity futures. If I want to sell the equity futures again, dollar must confirm my narrative. Again, NQ, this is an ideal entry for me. 3-minute fair value gap short, stop loss above this reclaimed fair value gap high. It will allow for the market to trade a little bit into that 15-minute fair value gap, but I want to see a full closure of that. And 1 hour drawn liquidity is the low for 1 to 8.5 risk to reward ratio. And I'm taking NQ as my market. Gold is retracing lower. That's why we are seeing some strength and distribution on DXY. Gold, we talked about the idea with gold. It rallied perfectly from the daily order block. Just watch the level I gave you. I gave you this level yesterday in the evening commentary. I wanted to see expansion after the stop run on a major sell side liquidity pool. Tuesday forms the low of the week. We rally higher. Okay, ladies and gentlemen. Now, gold, again, could be bullish if gold really starts to expand higher. What I actually want to see, I want to see gold rally higher. But this means DXY could continue and resume a lower. That's the key here. Because if gold is bullish, then DXY is bearish, okay? Now, if we are actually bullish on equity futures, which I really don't think, because look at this, we're at a weekly rejection block / low. which is also a long-term target objective. You don't want to go against higher time frame order flow, which is clearly currently bearish. Okay, we're not inside a consolidation profile anymore, that's for sure. But again, in any case, for a long, which I really don't see, we don't want to lose sort of with DXY. If we want to see longs, then DXY should sell off. We could reclaim the 1 hour fair value gap, or just sell off from the mean threshold of this order block again and continue lower. T-bone futures, again, I'm just building up a thesis. T-note futures should rally from this 4 hour order block right here. The wick, which is a discount array, should rally higher if we want to short equities. Okay, and just technical analysis on the equities. We don't want to see the 1 hour order block being invalidated. Plus, we don't want to see a run back below this low where retail traders are trapped short into the market, which would let them allow to close their trades break even. Okay, so pretty simple. We don't want to see the order block being fair value gap being lost on the 1 hour fair value at 1 hour time frame, and gold should sell off, which I really don't see happening. We have this 1 hour, we have the volume imbalance on the equity, so the futures charts, CFDs. We ran above, this is London session high from previous day's session. We ran above that. We could see some distribution again back to this low, and this would allow for a short-term rally in equities. But again, I would prefer the bearish sell-off on equities futures, but it has to confirm my narrative with a bullish dollar, and T-note futures are already selling off, and gold will likely be bearish. Sorry, yeah, bearish. If we want to see shorts on equities. But if gold still is bullish because we have this massive buy-side liquidity pool, it wouldn't be too surprising. Gold can rally and we can still have shorts if DXY is bearish and bullish, and T-note futures are bearish, then we can still look for shorts. Okay, I think this wraps up the analysis for the New York session, and we will see us in the evening commentary, ladies and gentlemen. Have a wonderful session. Trade safe, stay safe. Until then.